Welcome to the Female VC Lab podcast. I have Kristina. In one line, give me your name, your title, and the name of your fund.
Kristina Chapple, General Partner at 11 Tribes Ventures.
So, Kristina, what inspired you to become a venture capitalist or an investor?
I was overwhelmed with how much destruction seemed to be present in the venture industry, and not just destruction when it comes to businesses being created and then later driven into the ground, but also the lives of the people operating them, starting first with the founder and trickling down later their team. And so if you had asked me which side of the table I would find myself on, I would have predicted the founder side, but thankfully I fell for the pitch to come work for a startup that's investing in startups, and one that was doing something different when it comes to supporting the founders first and then later their full team through.
That's awesome. So tell me a little bit more about that thesis and the motivation behind that. Clearly, you have a passion for founders, but how did that come about? Did someone have some buyer's remorse, I'll call it?
I wonder how many stories begin that way. It's a good question.
I don't know.
Oh, man.
I've been reading a lot lately on LinkedIn where they've had some VC buyer's remorse. Some of it's because it's a math problem and they didn't quite understand some of the math, and they didn't understand like how this was really going to impact them as a founder, which is unfortunate. We do need to educate founders on that.
Exactly. You know, how I describe why 11 Tribes exists today, when there is a true sea of emerging managers out there in market, is in the idea of the exit conversation.
Absolutely. And 100%. You must have that.
Exactly. For the last 70 years, investors have focused on only one part of the exit conversation, which is the business outcome. And of course, as a steward of capital, we just raised our second fund, 46 million.
Congratulations on that.
Thank you. Thank you. We want strong business outcomes for every single person we are privileged to meet. And it's fairly straightforward in how to measure those with exit valuations, ARR, cash flow, the like, and those are good things. But 11 Tribes exists to shed light on a part of the exit conversation that has historically just been swept under the rug. But we think it's more central to whether or not the company sells. And we call it the founder outcome. How our team measures it is what's the state of the founder's most precious relationships when they eventually walk away from their company. How many of our teams, if they are married, are still together with their spouse? How many of them, if they have children, have kids that know them and talk to them? Is there any peace in this life? Like health, physical, mental, spiritual health. Are those pieces intact? And everyone on our team, we have had some experience day zero at an organization. For me, it was nonprofits. The only person in our partnership that has built a venture backable company is our managing partner, Mark. But we have all taken what we have coined as this downward journey of entrepreneurship, where along the way, each of us had these periods where our founder outcome came into jeopardy and or totally fractured. And it woke us up. It woke us up in this like scary, sobering.
Well, it's scary.
Yeah.
And it is
for
sobering.
Me, exactly. For me, it was my family relationships. And for Mark, it was his sense of identity and self-worth being completely wrapped up in the
connected up into that.
And so for us, that was the real insight that, oh, wow, not only am I missing out on this core human experience of relationships and health, like those pieces being the things we're most grateful for or regretful over at the end of our lives, but also by me compromising on my family relationships or my physical well-being, I'm actually putting existential risk and threat on the company being able to endure 5, 8, 10 years it often takes to exit.
That's true.
And so it was like, okay, can we find people who are going to bring just as much intensity and seriousness to ensuring that their founder outcome is not only intact, but flourishing if possible, as with the outcome of the business, and trying to make it to a compelling exit for them and their investors, whatever that number may be. So for us, in order to feed the founder outcome and the business outcome, we allocate 2% of capital on top of our check that's non-dilutive. So typically we're paying
that's awesome.
$1 million to $1.5 million, and our founders are getting $20,000 to $30,000 in addition in a separate bank account to spend on what we call founder resilience. And
Oh, wow. That's kind of cool.
different for each person.
Yes.
But often it looks like coaching or therapy or co-founder health coaches, financial planners. We just added a marriage counselor to our founder resilience menu per the request of our portfolio.
That makes sense.
So we are very serious about putting money where our mouth is there. And we hope that's only the beginning of some of the resources that we're bringing around our founders to care for them as people. But then the other piece of our thesis is we underwrite very differently. Some investors might be shocked that we are calling ourselves venture capital based on the way that we underwrite. But we are trying to find founders who will build for an exit in the, call it 50 million to 300 million enterprise value.
Just say middle market.
Yes, yes. And so we are not underwriting our portfolio on the back of one company, exceeding $1 billion, having all of our returns in that one proceed.
Which makes sense.
That's right.
Which makes sense.
Right.
Because depending on where you invest, 50 to 300 million could be a good exit.
Exactly.
Okay.
Fund sizes strategy, valuation, we're very sensitive. Some people call us cheap, but we work with our founders, and everything for us starts and ends with that founder and business outcome.
So that's interesting how you're investing in the founder, I'll call it, because that's true investment. So do you find, since you're on Fund 2 now, that their leadership capabilities have increased as the time has gone on based upon that value that you add from their well-being? Because people are 360 degrees. Right. Like, you're not just one dimensional. Like, people are very multidimensional, as you stated. So I think sometimes we're mindful of that, but I think sometimes people are not mindful of that. It's not all about one side of the brain. It's about they're multifaceted, and a person's multifaceted and they have multiple things going on at different stages of their life as well. I like how you're handling that, but do you see their leadership capability improving because of that?
Empirically, yes. And we are actively working with a doctor of sociology at the University of Baylor to capture some academic data on long-term, what are the effects of a leader who is investing in themselves, and how does that translate to financial returns or not? Is there a correlation that is distinct?
I think there's a correlation, because if you think about peacefulness, like if you have like peacefulness in your life, whatever that looks like for you, and you have peacefulness across yourself and inside of yourself, I think you're just going to be you're going to have more clarity, and you're just going to be more focused, because those other life elements, which are not distractions, they're life, you can handle them in a different way versus people that may not have some of those tools and some of those kind of outlets to handle things of that nature.
Exactly. And that is such a great point, Barbara, because whether it's peacefulness or a sense of groundedness, there's so much stress and anxiety that will plague any entrepreneur.
Yeah, there's already enough built-in stress running a company.
Exactly. Yes. And a topic that we are constantly returning to, both with founders that we are meeting for the first time and those who we have had longer portfolio relationships with, is identity. And
that's a big one.
Reinforcing the idea that a founder's worth as a human is not wrapped up into the success and performance of their company. Like, they have value and identity outside of the fact that they are the CEO or CTO of their business. And when founders believe that to be true, and when they have other beautiful, flourishing aspects of their life, whether it's strong family life or strong physical health, there are other pillars for them to lean on, so that the one thing doesn't become the only thing and then dominate them in a way that's going to be detrimental for them as a leader at the helm of that company. Like, how are they going to create sound decision making and an ability to get through periods of deep troughs if they believe that their worth as a human is riding on its success? That's only going to make decision making.
That creates other stress, right? And then you don't have that peacefulness or that groundedness. You don't have any of that. Then you have a different level of stress.
Exactly.
Awesome. So, what are you currently reading or learning or listening to these days?
Barbara, I'm back in the books. I'm
Awesome. We like
bringing
books
that
here.
with me. Yes, a
what
thorough
What are
book.
you reading right now?
A thorough book. It is called Personal History,
Huh.
and it's an autobiography from Katharine Graham.
Hmm.
And she came into running the Washington Post during the time of
I was
Watergate,
going to
the
say Watergate.
publication of the Pentagon Papers.
Oh,
And
and
so
that, okay.
her family history is has so much richness and complexity. And I'm still in the early days, around page 200 of 700, and I am a chronically slow reader, but I am chewing on all
Oh,
of
good.
this. And so I love that story, and really
What's the lesson out of that story so far in the first 200 pages? One lesson for us.
identity and confidence.
Okay, okay.
Yeah,
That's a good
this is a
lesson.
woman who constantly performed and was at the top of her peer circles, and yet she never saw
She still
herself
she still
as
had
fitting.
that she still had that identity.
Yes,
Yeah,
she
that's
was
okay. That's
overshadowed, even
yeah.
not only by the shadows of the tall stature of all of these giants in her family, but also one that she cloaked on herself. And so I'm
Interesting.
so excited to see how her character
How did she come
evolves.
out of that? Yeah,
Yes,
that'd be interesting.
yes.
Can't wait to hear that. All right, Christina, here is our bonus question, which everyone gets.
Woohoo!
In 2 years, how do you see venture capital or investing having changed or evolved?
I think founders are going to continue raising less money and selling companies for sub 200 million.
Hmm.
Today, for a founder to strive for an $100 million exit, that is not interesting to the vast number of venture capital players currently in market. I think people will continue getting creative around their underwriting, given that
Yeah,
team size is going to stay smaller at
it's going to
many.
be way smaller.
And so the cost to build is decreasing, which is amazing for
That is
founders.
true.
It's amazing for founders. And for a person who sells their business for $100 million and has 80% of the cap table, hello.
Hey, that's a good exit.
Huge life-changing day, generational wealth creation event for them and their family. And for us, should we have 15% of that company
That's a big
on
win.
a $40 million fund? That's a huge win
That's
for
a big
ROE
win.
days.
That's a
And
big win.
so, should we have a concentrated portfolio of 25 to 30 investments that are
Like
aiming
that?
for
Yeah.
an outcome like that? Hello.
Well, it's interesting that you bring that up. I think a couple of weeks ago, Wix bought this company for around that 100 mil. There's 8 people in that
Mhm.
company. And they were doing like a no code, I think no code websites, and they sold it for 86 million. So that's a little bit, but it's 8 people. So if you think about that, what you're saying logically, that makes sense
Right,
because how many people were on that cap table? Probably all of them, and that's it because they
right.
bootstrapped that whole
We
company. So there
hope,
was,
we hope,
I think, no, I think they didn't take any VC. I think that company was completely bootstrapped.
which is
And
what
so can you imagine that?
it's
So
amazing.
let's say you even got on there, like you said, at 10 or 15%, and you're one of the only VCs, and then they sold something like that.
Right, exactly. So I
Not a
think there's
bad deal.
less people competing in the alphabet soup of raising through Series B plus.
Mm.
And while it's fitting for some companies and the North Star that they've set for themselves, I think that there is so much opportunity for a team to do a lot of good in an industry that they know much about with very little capital,
Yes.
across a relatively conservative time horizon, too. Five
Yeah, I
years,
don't think
eight
these
years.
guys were even doing, I think it might have been 2 years.
Yeah,
So if you think about from a time horizon side, 2, 3 years,
right.
if you can start turning some of these faster, and then the teams are leaner, that's
Exactly.
that's going to be a big deal. We're going to watch that. We're going to watch and see how that works in a couple of years. So, how do people contact you?
People can find me on LinkedIn. I am very responsive in my DMs. And for founders who are wanting to come a little closer, we have an intake form on our website for founders who are looking to fundraise in the near term.
Awesome. So we'll have that in the show notes. So
Perfect.
thank you very much, Kristina